end of this webinar, we're going through the most popular questions and try to give you good answers. So, okay, now I think it's about, Jarkko is going to start the presentation, please.
Thank you, Nico, and I also welcome to you all to this first webinar out of 3, which we are going to arrange during next 4 weeks. And this first webinar is dedicated to reporting, both narrative reporting and financial reporting. And before we start, a couple of technical questions. So in order to maintain the technical environment in good condition, please keep your microphones mute if you are not speaking, and maybe even if it's so nice to see your faces, maybe we keep the videos off also, like most of you are doing right now. And note that we are recording this presentation, this webinar, and this will be found most probably through our website later on. And like Nico said, the questions related to reporting, both to my upcoming presentation and Ossi's presentation, which follows me, those questions will be answered mostly after Ossi's presentations, and we have about 15 minutes time at the end of this webinar to go through these questions, and other questions will be answered later on writing. And if you have any technical questions during this presentation, you can use this Zoom chat functionality. And you will find also that Slido page and the enter code on chat if you didn't catch that during Nico's presentation. But now we start the presentation interim report. Okay. And the interim report, if you say it shortly, it's description of first or the second implementation year. And it consists of both narrative report and financial report. And then there are other annexes which should be attached to this report. And the schedule of each has mentioned in payment and reporting plan, which you have, I hope it is updated in each project at the moment. There have been many changes already, and pay attention that you have had updated plan, and you know when to report and when is the right time to request payment. And there are 2 timelines. Interim report itself should be submitted within 1 month of the end of reporting period. And then there are another timeline. payment request with expenditure verification report, which should be submitted within 3 months of the end of implementation period. And these are two different documents. And few things about how to report. The report itself, we hope it's clear and consistent presentation. It is simple enough, consists of plain text principle, which means that short sentences and things like that are obeyed. Please divide text with subheading wherever possible in order to make it easier to read. And most of all, be honest, everything what you tell. Few examples, what kind of, first of two examples are not so good ones. So if you tell what you have done, don't be too short, like all the planned activities has been implemented. That doesn't tell very much about what you really have done. Or if you just say that you have some kind of seminar where were 50 participants, it's not enough. But the last one is maybe better. The content of the interim report, it consists of summary part. Then there is a work plan which should be modified. There are indicators, indicator values should be updated. And then there is a communication and visibility part. The summary, what we want you to tell us in summary section, we like that you describe the activities which you have implemented during the implementation period during one year. Then you should describe the financial situation in the project at the moment, all the challenges you have met, and also lead partners' view about what is the cooperation between the partners have been like. And this is the lead partner's view. The partner will assess their cooperation in separate assessment which are attached. And the work plan is more detailed description of the progress by each work package. There should be updated information related to status. You should update this information related to status, roles, and schedule. And here you can find the example. And as an experience of already checked reports during last year, we have found that projects hasn't understand maybe right what we like you to do in this section. So you can, when you go to this work plan sheet, you will find as an assumption the application text in this description field, and you should modify and replace this text now. You should tell what you have done in each work package, each activity. When you click open every work package, you get this window open, and you have possibility to modify the description field and also the status field. If work package is still in progress or is it still already completed, you can click it here and change also estimated end date if and when necessary. So please go through every work package, what you have done during implementation period here. Then the next is the indicators sheet. There you find the target value, which you have set in the, at the beginning in application phase. And then you will fill in the realized cumulative value by the end of implementation period, how much you have reached by then. Then there's this communication and visibility sheet where you tell about the realization of the communication and visibility plan, how you have realized that. So this interim report narrative part consists of 4 annexes, which are obligatory. So every partner should fill in assessment, which should be attached. Then there's a separate communication and visibility indicators and outputs form, and financial report, which is actually annexed to interim report. And also lists of attendees of seminars and other events which are organized by the project should be attached. There are few templates on program's website you can find, and please use these templates. Not any forms of your own. This views of some annexes. This is a partner's assessment, very simple form where every partner tells about the realization of project and respective role and challenges and other possible comments. And this is communication and visibility indicators form. Many things to be noted there. And then this is the financial report itself, which consists of several spreadsheets. And please note that the content may not be locked, and formulas which are in this template may not be removed or changed. This is very, very important. And you will attach this interim report to Promas as an Excel mode, not PDF or any other format. It should be an XLS file, so we can modify it here in Managing Authority. And financial report, this is the sheet which should be filled in by every partner. Every partner will fill in this form, and then there is this consolidated sheet which is filled in by lead partner only, where lead partner collect information of every partner together. And submission of the interim report, it is totally electronically submitted in Promas. Every document, everything happens in Promas system. Nothing shall be submitted to MA as a hard copy, only in Promas. And remember all the annexes. If you have problems to collect every annexes on time, please contact first your contact person in Managing Authority to agree how to manage if you have some problems. Do not submit any report without every necessary annexes. And the contact person in operational unit checks both narrative report and financial report, some parts of that, and financial unit checks both financial report and later the expenditure verification report. So the job load here in managing authority is divided like this. And here are the tasks which operational unit checks, and we go these quite fast, so we are running quite tight time schedule here. So important is that the information, for example, here in personal, here you have these persons which you have presented in financial report should found also here in Proma's personal list. So every staff person which are presented in financial report should be found both in budget, those positions, and names and positions in personal list. Make sure that these are consistent with each other. And if any travel information is mentioned in report, we check that those travels are noted also in budget. And if you have some equipments or small scale investment in report, we check that you have noted those purchases both in budget and from a summary purchases list. So make sure that these are also consistent with each other. So approval of this interim report is prerequisite for the interim payment. So after operation unit has approved, financial unit can start their checking process. And finally, this will lead to payment order. Okay, this was my part, and like I said in the beginning, you may present, and I wish that you present your questions through the Slido pages, and we will answer and go through those questions later on after Ossi's presentation. And now I will give the floor to Ossi. Thank you.
Good morning, everyone. I'm Ossi Thornberg, and I work as a financial controller on the Karelia CBC program. Okay, now I have to share my screen. Take out the PowerPoint. There, and full screen. Slideshow. All right, looks good. So, in this part of the webinar, I'll be going over the basics of financial reporting for projects. Now, this presentation has been built specifically with project managers in mind, so we will not be focusing so much on the technical details of financial reporting, but more on the big picture and main principles. First, I'll discuss the financial report itself. We'll go over the various cost types, the principles of eligibility, the value-added tax, and the audit trail. Now, the main feature of the financial report is the allocation of project costs in the 7 different categories. The allocations are, of course, done during budget negotiations, but when you're reporting project costs, make sure to report them under the correct agreed upon cost headings so that the budget is respected. The largest cost category for most projects is staff costs, which comprise of the actual gross salaries of project employees and the compulsory social costs. Bonuses, compensations, or other additional expenses which aren't compulsory are not eligible staff costs. And of course, in cross-border work, travel costs are unavoidable and are included practically in every project. Typical travel costs include transportation, accommodation, daily allowances for project employees. Note that travel costs for external experts who are not project staff per se are allocated under the external expertise and services cost heading. The third cost heading is equipment and supplies, which includes smaller purchases for the project staff, computers, mobile phones, purchases which are meant for the performing of daily project work. And the fourth cost heading is small-scale investments, which is different from equipment and supplies in that the small-scale investments are directly related to the activities and outputs of the project. And external expertise and services concerns all costs borne from the use of outside experts, consultants, other service providers for project needs, such as interpretation, translation work, etc. The sixth heading, investments, concerns only a handful of projects. It's about costs related to infrastructure, such as roads, energy networks, and so forth. These are projects which are focused on large infrastructure investment. The seventh heading is administrative costs, which is a bit different. It's about project implementation related management costs, which are very general, such as daily office running costs, rental costs, internet connection costs, and so forth. Administrative costs are funded on a flat rate basis. The largest possible flat rate is 7%, but it can also be lower. This is determined on a case-by-case basis. The amount is defined during grant contract and negotiations for each project. In the financial report, the administrative costs are reported only as a single sum, which is based on the amount of reported costs in the reporting period, and of course the flat rate percentage defined in the grant contract. Now, I highly recommend reading the pages 59 to 71 from the program manual. They go through each cost heading in detail, and there is a comprehensive list of cases of eligibility and ineligibility for each cost type. You can consult this list if you are unsure if a cost can be considered eligible for the project. The eligibility of costs. The most important rules are basically the following. The cost must be reported in the financial report. It must be recorded in the project's accounting in the general ledger. It must be verified by the auditor, and it must be incurred during the reporting period or the implementation period of the project. Basically, that means that if, for example, in the first reporting period, a payment is made for some project-related service, installation of some equipment, but that installation takes place during the next reporting period, it can still be immediately reported in the first reporting period and approved as a project-related cost, because the delivery of the service is agreed to take place during the implementation period of the project. Also, an important rule to remember is that any purchases of subcontracting that is done within the project consortium is considered ineligible. That is, for example, partners buying services from each other. Page 56 on the program manual has a good list of principles of eligibility and ineligibility for project costs. I also recommend reading that. The value-added tax can be a significant cost for a project partner, but it isn't eligible for all organizations. Basically, if the partner can recover the VAT of the incurred costs of the project, VAT is not an eligible cost. In such a case, the VAT is not the final cost of the partner. However, if the VAT is the final cost of the partner, because the partner cannot recover the VAT, it is an eligible project cost. An additional verification document must be provided for the auditor and a copy sent to the managing authority, the payment request, in order for VAT costs to be approved in the payment. Remember to deliver the copy for the managing authority so that there is no need to ask for it separately during the financial checking process. The audit trail is an important concept that is at the core of project financial reporting. A clear audit trail must be established from the original invoice for a cost to the financial report of the project. The audit trail goes from the invoice to the organization's accounting system, to the project cost center, and to the financial report. The trail needs to be clear and easily verifiable. This is considered at every point of the financial checking process. Now, the second section concerns the reporting and verification processes of the partners during project financial reporting. We'll take a quick look at the different accounting models that can be used, the contents of the payment request, and the annexes that are required for the payment. There are two possible accounting models that projects can use. The standard one is the decentralized model. In this model, there is one lead partner and a number of reporting partners. Each partner makes their own financial report, and the lead partner collects them together in a single file and fills out the consolidated financial report. In certain cases, the partly decentralized model can also be used. Adopting the partly decentralized model requires prior approval from the managing authority and the lead partner. In this model, in addition to the lead partner and normal reporting partners, there are invoicing partners. An invoicing partner does not make their own financial report, but instead delivers the necessary invoices and financial documentation for a reporting partner. The reporting partner makes a financial report and includes the invoicing partner's costs into that report. The reporting partner then transfers the money to the invoicing partner after getting the payment from the lead partner, of course. Note that invoicing partners can only report costs in the staff and travel categories. There are three types of payment requests. The first one is the simplest, the first pre-financing payment request. In almost all cases, projects are paid a pre-financing sum, which is typically 30% of the grant. The pre-financing payment is an advance payment and requires no financial reporting. An interim payment request is made after the end of each reporting period. The interim payment is based on project-related costs reported in the financial report, verified by the auditor, and approved by the managing authority. Note that the sum written in Article 5.2 of the grant contract defines only the maximum amount of interim payments that can be made to a project. That sum will not be paid in full automatically unless there is a sufficient amount of eligible costs reported to justify that amount of payment. Also note that there can be more than one interim payment request depending on the length of the project. The normal reporting period for an interim payment is, of course, 1 year. Finally, it's important to remember that the first pre-financing payment and the subsequent interim payments can add up to a maximum total of 80% of the total grant. The rest will be paid during the final payment. If the project incurs eligible costs that would seem to allow for a larger payment than that defined in Article 5.2 of the grant contract, that cannot be done. Those eligible costs that go above the limit will be paid as part of the final payment. The final payment request works almost in the same way as the interim payment request. The payment amount is based on the amount of reported, verified, and approved project-related costs. And additionally, the payment amount can also include eligible costs from the previous reporting period, which, if it exceeded the 80% limit just explained. As the previous payments can only amount to a total of 80% of total program financing, the final payment can at most only be 20% of the grant if all project funds have been used. We'll look at some examples of this in the next slide. Also be aware that if the project ends up using less funds than what's been paid during the pre-financing and interim payments, instead of a final payment, there will be a recovery order for the unused funds. Projects cannot make a profit by leaving funds unused. Such funds will be recovered by the managing authority. Now, here are some examples of final payments. In both examples, the project budget is 400,000 euros and the program contribution is the typical 90%, which is 360,000 euros of these budgets. In the first example, the whole grant is used in project implementation, and in the second example, 15,000 euros remain unused. Both examples have a 30% pre-financing payment and full interim payments that amount to 50% of the grant. The difference becomes visible in the final payment. In the first example, as the whole grant is used, the final payment is a full 20% of the total grant, 72,000 euros. However, in the second example, the payment amounts only to 58,500 euros. This is because the total program contribution is 90% of total eligible costs that have been realized. As there are only 385,000 euros of eligible project-related costs realized, total program financing is 90% of that sum, which is 346,500 euros. And as in the first pre-financing payment and the interim payments, 288,000 euros have already been paid. The final payment ends up being the remaining 58,500 euros of total program financing. After that payment, 90% of total realized eligible project-related costs have been covered by program financing as agreed in the grant contract. The required annexes for each payment request are a bit different. For the first pre-financing payment, we only really need the financial identification form with the bank account details. However, if your bank has not signed the financial identification form, you need to provide an additional verification document with a signature from the bank. The interim payment request requires a number of additional documents so that the financial verification process can be completed. These are the following. Each partner reporting expenditure must deliver a signed and dated general ledger extract from the reporting period, listing all costs on the financial report with a clear audit trail. And the lead partner also fills out and signs the lead partner's checklist, which is also a mandatory annex to a payment request. And all partners reporting expenditures must also deliver the auditor's expenditure verification report. The terms of reference document needs to be delivered only once during the first interim financial report, unless, of course, the auditor is later changed. And annexes 2, 3, and 4 are delivered with each financial report. Also remember that if an auditor performs only a partial expenditure verification, that is, the expenditure coverage rate is less than 100%, you need to deliver a copy of the financial report where the auditor indicates which of the invoices have been directly verified. And if there are any changes in the bank account details, always remember to deliver a new financial identification form to the managing authority before the next payment. And often the document verifying VAT eligibility is not attached as a copy to the payment request. So if VAT is eligible, remember to attach the copy so that we won't have to ask for it later. As I said earlier, is must pay for the final payment request, as it is for the interim payment requests. There is, however, an exception. Partner organizations that are not public bodies or governmental departments need to deliver a bank account statement indicating the amount of interest accrued to the project during the period. If such a statement is not available, deliver a document of the method of calculating the interest. Someone seems to have their microphone on. I think I'm hearing running water. So please check that your microphone is not on. So the final part of this presentation concerns the managing authority's own verification process and the payment process. We'll discuss the following topics: the 45-day target schedule for payments, the calculation method for payments, electronic signatures, the payment process, clarification requests, the payment order, and the training video, which was just released on the program's YouTube account. Thank you for closing the microphone. So, the financial unit has a target schedule of 45 days for checkings and payment processing. The schedule starts once the interim report has been approved by the operative unit and the signed payment request has been received by the managing authority. Payment requests are processed in the order of reception. Note that days are not counted while clarification requests are being processed by the project partners. Payment requests can also be delivered electronically if your organization can provide a legally valid and binding electronic signature. You can send the electronically signed payment request to the managing authority by attaching the electronically signed document to the payment request in PROMAS. This is as good as sending a signed document through the mail, so the managing authority will consider the payment request received and the 45-day count will begin. However, PROMAS unfortunately does not automatically notify us of the submission of a payment request, so if you've chosen to deliver an electronically signed payment request through PROMAS, it is highly recommended to send us a notification email so that it'll be noticed immediately. The calculation method for payment amounts in the interim and final payments is quite simple. The payment amount is determined by the amount of reported, verified and approved costs on the financial report and the funding percentage defined in the grant contract, which is usually 90%. And the formula is the following. The funding percentage is used as a multiplier for the amount of eligible costs. For example, a 90% funding percentage applied to 100,000 euros of eligible costs adds up to a payment amount of 90,000 euros. And of course, these sums are affected by the 80% limit for pre-financing and interim payments. So that's on a case-by-case basis. The payment procedure begins when the payment request is received. The financial unit begins checking the financial report, the expenditure verification reports, and all other necessary documents. And if everything is in order, the payment will be made within 45 days of reception. The length of processing, of course, depends on the current queue situation at the managing authority. It is not typical for the payment procedure to require the full 45 days. Usually the processing time is shorter. And this is, however, affected by the quality of the reporting. High quality financial reports are quick to process, which also helps cut down the queues. Once the payment order is made at the end of the verification process, it is then delivered for signature to the administration director of the managing authority and then delivered to the financial department for payment processing. This part of the process usually takes a few days. Often the payment procedure requires clarification requests from the managing authority. The clarification requests are sent by email to the lead partner, who coordinates the collection of answers from the various partners the requests are directed to. Typical reasons for clarification requests are missing documents, discrepancies or inconsistencies in the documents, the financial information, or missing information, or perhaps even missing pages sometimes. The lead partner has 30 days to provide a response to a clarification request. The response can be sent as one package or in several parts, as the lead partner receives responses from the other partners. Responses are processed by the managing authority as quickly as possible as we receive them. Partial responses will also be checked as soon as possible. The disadvantage of sending the responses as one package comes from the fact that sometimes further clarification requests are necessary if a clarification is insufficient somehow. And if this insufficient clarification was available and sent to the managing authority already earlier, before the rest of the clarifications were ready, the additional request would have also been sent earlier and perhaps would already have been answered by the partner in time before the other clarifications from the other partners are sent. If in such a case, there would not be any additional delay caused by the insufficient clarification, because the payment can only be made after all clarifications are checked and accepted. Once the payment is made and the financial unit receives the documents back from the financial department, the payment order is then saved in PROMAS. It can then be viewed in Promise by the projects. The request for rectification and the approved financial report are included as attachments. And a scanned copy of the signed payment order and the request for rectification is sent by email to the lead partner as soon as possible, and the original documents are sent by mail at the same time. And finally, the financial unit has prepared a thorough and detailed training video for the financial staff of projects. It discusses the process of financial reporting in comprehensive detail and goes to a deeper level of detail than this presentation. The video has 2 language versions. There is a Finnish language version of the video and a Russian language version. The videos can be found from the program's YouTube channel, which is named Karelia CBC. And that's the end of my presentation. Thank you for your attention today. If you want more information about financial reporting, I recommend checking out the training videos on our YouTube channel. And of course, you can always ask questions directly from us. Thank you.
Okay, then we go into the question section. Apparently, some of the questions were written in the chat section in Zoom, but I copy-pasted them into Slido. And apparently there was some kind of mark limit in the Slido, so I had to edit those questions, but hopefully I managed to keep the original idea of the questions. So there's the first question, this being marked as a most popular one. So the more thumbs up question is the first. So did Jarkko mean that every project reporting schedule has been unilaterally updated by the managing authority, even if a project has not requested it?
Yes, I didn't mean exactly like this. The updating the payment and reporting plan is relevant when the project implementation period has changed. There has been already many prolonged projects, and then we have to recheck naturally the reporting schedule. And first, of course, we negotiate with project about the reporting procedure in this change situation, and then we send the updated plan to the lead partner, in order to keep both lead partner and project aware of where we goes. So
yes, the main idea is that there's at least some kind of report after every 6 months of implementation. So naturally those schedules had to be updated.
And there is also always question about if extra payments are needed, and that's why we have to control.
Yeah, so they're sort of a tailor-made. Okay.
And then I can take this next. What if the report cannot be submitted within the given deadline? So this I meant to say in my presentation that if you have some kind of problems submitting your report, please contact your desk in managing authority to agree what is the procedures in this case. So first contact us, and then we negotiate what can we do and what can you do.
And the second one, could you prepare the explanation of the valid added tax eligibility in Russian, please? So shouldn't there be some kind of information also in Russia about this valid added tax issue? Well, this.
If I understand the question correctly, it's about if we can prepare an answer in Russian language. Well, right now I cannot, because I unfortunately do not speak Russian, but in some of our materials, I'm sure that this is explained. And certainly we can prepare this kind of explanation in Russian and disseminate it to the projects.
Yeah.
And I suppose I'll take the next one as well, which is about giving examples of organization types that usually can recover the VAT from the tax authority and those that usually cannot. Well, my understanding is that basically most government organizations and public sector organizations that do not do business, do not sell products, they can not recover the value-added tax, and as such, it is an eligible cost. And private sector organizations who do business usually have the possibility to recover the VAT. And my colleagues can certainly fill in if I left something unsaid.
Yes, and the final answer will be found from your local tax office. They'll know the right answer, that are there ineligible or eligible costs. Okay, then, and this, did I miss any questions? But there's information with gray background, which can be seen the earlier saved data first interim report, how to update the project state to increase more rows, info boxes, or try to modify the information already visible but not editable. This is sort of a promise-based question, I think.
Maybe didn't quite understand now this, but there might be some bug in promise system if it works like this. There should be this information in work plan should be editable. So if this kind of problems appears, maybe send a screenshot to us, and we see what's wrong. I don't quite understand now.
Okay.
What might be the reason?
Yes, and if you see your questions in Slido and it has been sort of modified, please inform me ASAP, because I had to cut them a little bit because, as I mentioned before, there's a sort of a limit. So the next question is filling in the financial report by reporting partner. Is the financial report, the Excels, there's a column J and H. How do partners fill these?
Okay. So if you're talking about the partner specific financial report, well, as I'm looking at the financial report template here, the column H is about total costs of the reporting period per heading, which is, well, that is the cost for the reporting period that is being reported, and column J, cumulated costs per heading accepted by the managing authority before current report. Well, basically, in this column, you fill out when you are submitting your second interim payment request, or alternatively, your final payment request, you add in the number of costs accepted in the heading, cost heading, in the earlier financial reports. So many projects are now sending in their second financial reports. In column J, you have the amount of approved costs from the previous financial report. I hope that answers the question.
Yes, I'm reading the next one. That could you, for a certain project, an estimated timetable when the additional information exchange starts? Is this?
This is about the clarification requests.
Yeah, the information that been changed via email, I think. My answer is that there's no any certain timetable for that. What is Jarkko's opinion?
Yeah, I think that we cannot of course, estimated timetable is within 3 months after we have received interim report. But usually we have a situation that we have plenty of interim reports on our table, and we cannot set any quite exact estimation when we are conduct the project. And we have 3 coordinators, which I think we all have different work methods how to manage this thing. But as soon as possible, I think right answers.
My experience from the previous reporting was that the auditor tried to find mistakes. Not finally all the cost items were accepted. Well, this doesn't look like a question. Do you have any kind of comment on this?
Well, certainly the auditors try to find mistakes if there are any. So sometimes there are, sometimes there are not. And if all your items were accepted, very good.
Yeah, if all the costs are eligible, they are eligible. So
that is indeed so.
Yeah. This is a part of a longer question, but I try to cut it to minimize it. So the partner is participating in the project, but has not yet used the reserved funding. Can they make a calculation of the cost at the end of the project cycle? So
I guess this is a financial question. So yes, if there are costs incurred during the project, they are reported in the financial report where you want the payment to be made. So it is possible some partners, for example, have a budget, but they do not report costs in the first interim report because they have to have the auditing, which increases costs. So some partners may only report their costs one time, all costs, so that they can go through with one audit. And so they can make the calculation of the costs at the end of the project cycle, I suppose. Do you colleagues have other insights?
Yeah, actually we asked this thing in the beginning in application phase, negotiation phase, where we asked you to fill in the pre-information form. And if the situation will be changed from that, I think it would be best to inform your contact person in the managing authority if some partner will report their cost only at the end of the project, for example.
Yeah. The next, what kind of control you have for the funding distribution between the partners? So my answer is that therefore there are the thing called partners agreements, and this issue should be written there. So we have sort of a monitoring only on a project level. So it's sort of up to project consortium how they make this distribution. When the project ended, but the auditor invoice hasn't been paid, are there any rules when it should be paid?
Well, certainly as soon as possible. Understandably, the final auditing invoice cannot be paid during the project implementation period because the final auditing happens after all other project costs have been incurred. So honestly, I cannot remember if there is an exact deadline for this. Perhaps Auli can remember that, or Jarkko. I would say as soon as possible.
Mm-hmm. Yeah. Okay. If a partner has had a misunderstanding that the project work is eligible for funding only after the signing the project agreement and reception of prepayment, is it possible to later assign work time cost as a project cost by correcting the accounting to show the true project hours worked before prepayment? Well, sort of, I would say that the rules are quite clear that the costs are eligible only after the signing the project agreement. So
yeah, I think this is quite a strict rule.
Yeah, that's quite simple rule. So if there's any costs before the project agreement hasn't signed, so naturally those costs are seen as ineligible and shouldn't be reported to us. I'm confused. Don't the costs need to be?
If this is a clarification that PA mean a partnership agreement, not grant contract. So yes, it is eligible even the partnership agreement hasn't signed.
Oh,
it doesn't affect. Yeah. Correction. If that's,
oh, good correction. I read it because yeah. Okay, I'm confused. Don't the costs need to be reported for the month when the cost incurred and not all costs after the implementation period?
If I understand this question correctly, and I'm not sure I do, but all costs reported after the implementation period. I mean, certainly you submit the financial report after the reporting period is over, and in the financial report for the reporting period, the costs are reported for the month and date when they are paid. And when talking about costs after the implementation period, well, that is basically only agreed upon evaluation costs and the final auditing. But yes, I hope I understood the question correctly. If someone has other thoughts, you can fill in.
Yeah.
Okay, I think we have gone through all the questions presented, and if any other questions are still in mind, I think the Slido is open some few minutes yet, but we will answer those afterwards, and you will find all these answers also.
Yeah.
And now we are on time. We are going to finish. I will thank you all the participants and active participation, all these questions, and I will thank Yevgenia for the technical assistance. Everything works once again fine, and we have gone to the end of this situation. I will remind you to reminding webinars, which next one is in next Tuesday at the same time, concerning the state of play of the Karelia CBC program. So COVID-19 effects on projects cross-border cooperation post 2020. And the last webinar is 8th of December, the same time, 10 a.m. Finnish time.
We have yet 1 minute. There was one more question. Does all partners have to deliver their own project ledger together with the financial report Excel file? The lead partner draws together one financial report Excel file, which is submitted to the managing authority, and with the payment request, a project general ledger from all partners reporting expenditures. So one financial report, several general ledgers.
Okay, but now I will thank you all and wish you very good continuation of this day and all week. Thank you. Bye-bye.